Hello, my name is Troy Atkins, and I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a housing advisory services company. I want to talk to you today about the key events that have transpired in the U.S. residential housing market during the fourth quarter of 2024. During the fourth quarter of this year, a report by the Federal Housing Finance Agency titled FHFA House Price Index Quarterly Report, highlighting important trends in U.S. residential real estate, and the monetary policy actions of the Federal Reserve to accommodate financial conditions that support economic growth amid concerns about inflation and a cooling labor market, were the primary topics of conversation. This movie presentation also provides an overview of the home price level for a select group of cities that make up the Adkins 60 City Home Price Index, and it provides a wealth of information for prospective homebuyers to use to make a prudent home purchase decision. This presentation was written, narrated, edited, produced, and published by Troy Atkins. I am the founder and owner of Adkins Capital Management. Adkins Capital Management is a privately owned and independently operated company. Our exclusive focus is on residential real estate. ACM is not affiliated with any parties associated with the residential housing industry. Our mission is to bridge the gap in the residential housing market, where deficiencies in education, public policy, regulation, product structure, and personnel have created an environment where prospective homebuyers need objective information and useful analytical tools in order to help them make a prudent home purchase decision. As an investment professional, I have more than 20 years of real estate analysis experience, more than 10 years of institutional investment consulting experience, more than 8 years of freelance financial and investment writing experience, and more than 5 years of state government experience at the agency and legislative levels. I am also the author of more than 25 published financial and investment articles. Accordingly, I am a 2023 inductee into Marquis Who's Who. For more information about my background, skills, and experience, please visit the Adkins Capital Management website. For the fourth quarter of 2024, research conducted by the Federal Housing Finance Agency found that U.S. house prices rose 4.5% between the fourth quarter of 2023 and the fourth quarter of 2024. In February 2025, the Federal Housing Finance Agency released a 2024 Q4 report titled FHFA House Price Index Quarterly Report, highlighting important trends in U.S. residential real estate. Here are the key findings. For more than a decade, the U.S. housing market has consistently shown positive annual appreciation rates nationwide, as illustrated in the chart. The abnormally high periods of 2020 and 2021 were driven by a combination of factors, including historically low mortgage rates, constrained housing supply, pandemic-induced demand shifts, and an overall economic recovery. This summary highlights key information regarding changes in house prices across the 50 states from the fourth quarter of 2023 to the fourth quarter of 2024. House prices increased in 49 states, with Mississippi being the sole exception. The average house appreciation rate stood at 4.5%, while the median rate was slightly higher at 5.22%. No state recorded a house appreciation rate greater than 8.3%. Based on ACM's analysis, houses would have to appreciate more than 8.4% to cover the 7 carrying costs of owning a home. This summary presents essential insights into the regional trends in U.S. house price growth. House price growth slowed across all regions in the U.S. between December of 2023 and December of 2024. The national average dropped from 6.9% growth to 4.7% growth. The South Atlantic region experienced one of the sharpest declines in projected growth, from 7.8% down to 4.3%. The East North Central region also dropped notably, from 9.1% to 6.5%. Some regions, like New England and the Middle Atlantic, maintained relatively high growth rates compared to others, though they still showed slight decreases. This summary offers key insights developed by ACM through an analysis of the FHFA report, complemented by aggregated research on the U.S. housing market generated with the support of multiple AI assistants, including Microsoft Copilot, ChatGPT, Google Gemini, and DeepSeek. Here are our findings. In terms of economic shifts, house price growth is likely slowing down due to factors such as rising mortgage rates, inflation, and reduced demand. High property prices in regions like the Pacific are making homes less affordable, limiting further growth. In terms of regional trends, in the Pacific region, growth slowed significantly, likely due to high property values and limited inventory. In the West-South Central region, growth dropped as migration trends from the pandemic began to stabilize. In the New England Middle Atlantic region, relatively higher growth rates persist, supported by steady demand and moderate pricing. In terms of market implications, for sellers, slower appreciation means houses may take longer to sell or need price adjustments. For buyers, price growth is cooling in some regions, creating better opportunities, but high mortgage rates still pose challenges. With this overview of the FHFA report in mind, let me now turn your attention to our analysis of the Federal Reserve's monetary policy. The general theme of this section is that the Fed lowered interest rates during the quarter to reduce borrowing costs and boost economic activity. However, mortgage rates for 30-year fixed-rate loans increased, underscoring the intricate dynamics of the housing market. In the fourth quarter of this year, the Federal Reserve maintained a cautious approach to monetary policy, focusing on balancing inflation control with economic growth. The Federal Open Market Committee decided to lower the federal funds rate by 25 basis points in December of 2024, bringing it to a target range of 4.25% to 4.5%. The Federal Reserve noted that while housing prices had stabilized, affordability challenges persisted due to elevated mortgage rates and limited housing supply. The Fed emphasized the importance of monitoring housing market dynamics as part of its broader economic assessments. Due to a host of economic factors, the national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan began the quarter at 6.08% and ended the quarter at 7.07%. The national average mortgage loan interest rate for a 30-year fully amortized fixed-rate loan reached an all-time low of 2.67% on December 17th of 2020 and the all-time high of 18.63% in October of 1981. Ironically, while the Federal Reserve's rate cuts were aimed at easing borrowing costs and stimulating economic activity, mortgage rates for 30-year fixed-rate loans rose during the same period, highlighting the complex dynamics of the housing market. Mortgage rates are influenced by factors beyond the Fed's benchmark rate, such as the yield on 10-year Treasury bonds and investor sentiment. During the quarter, the spread between mortgage rates and Treasury yields widened due to reduced demand for mortgage-backed securities and concerns about prepayment risks, These factors contributed to elevated mortgage rates, despite the Fed's efforts to lower borrowing costs. Additionally, housing affordability remained a challenge, as limited inventory and high demand kept home prices elevated. Lower mortgage rates might have attracted more buyers, increased competition, and further strained affordability. Policymakers emphasized the need to address these structural issues in the housing market to ensure sustainable growth. With this overview of the Federal Reserve's monetary policy actions in mind, let me now explain the proprietary analytical methodology that was developed by Adkins Capital Management to analyze the home price level of the cities that constitute the Adkins 60 City Home Price Index. From a finance-based perspective, our proprietary valuation methodology analyzes the relationship between home price levels, household income levels, the percentage of pre-tax household income allocated to housing, and the cost of debt for a 30-year fixed-rate mortgage loan. From the first analytical perspective, our valuation methodology calculates the justified mortgage loan interest rate, which represents the cost of debt that justifies the home price level with the household income level, taking into account that 28% of household income will be allocated to servicing the mortgage loan. From the second analytical perspective, our valuation methodology calculates the justified percentage of household income amount, which represents the percentage of pre-tax household income that justifies the home price level with the household income level, taking into account the prevailing national average mortgage loan interest rate. Based on Adkins Capital Management's proprietary housing analytical methodology, this section of our presentation pertains to ACM's comprehensive housing analyses. The general theme of this section is that 52 out of 60 cities listed in the Adkins Home Price Index are identified as having overpriced housing. The 52 overpriced cities in the Adkins 60 City Home Price Index were categorized based on their justified percentage of household income amount. Los Angeles, San Francisco, Newark, New York City, and Boston were identified as the 5 most overpriced cities in the index. In terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities by reducing the 30-year fixed-rate mortgage loan interest rate from 7.07% to 0%. In addition, in terms of a relative price level analysis, it is not possible to justify the home price level for the top 5 overpriced cities as underpriced because prospective homebuyers would have to spend more than the respective justified percentage of household income amounts, which fall within the unrealistic range of 83% to more than 100% of household income. Therefore, in order to justify the median home price level for each city, the median required household income level would need to increase to a level within the respective range of $136,121 and $404,064. Moreover, based on the median household income level, the quarter-ending national average mortgage loan interest rate, and the assumption that no more than 28% of pre-tax household income should be spent in order to repay the principal and interest costs of a mortgage loan, the justified home price level for the top 5 overpriced cities fell within the respective range of $144,241 and $415,731. It is important to note that given the dichotomy between the median household income level, the median home price level, and the current interest rate environment, the justified home price level for Los Angeles is lower than its required median household income level. Prospective home buyers should use the Adkins Residential Home Valuation Analyzer in order to assess the level of overpricing of homes in their community. On the other side of the spectrum, Based upon the justified percentage of household income amount, 8 cities in the Adkins 60 City Home Price Index were classified as underpriced for the fourth quarter of 2024. Detroit, Cleveland, Jackson, Des Moines, and Fargo were identified as the top 5 most underpriced cities in the index. In order to classify homes in the top 5 underpriced cities as overpriced, the national average mortgage loan interest rate would have to increase from 7.07% to more than the respective justified mortgage loan interest rate amount for each city, which fell within the range of 8.2% and 19.7%. Or it would have to be deemed imprudent by prospective homebuyers to spend as much as the respective justified percentage of household income amount for each city to repay the cost of a mortgage loan. Now that our quarterly residential housing market review is complete, here is some valuable information that you should consider. First, you can conduct similar housing analyses for your community and for your specific home purchase opportunities by subscribing to use the Adkins Residential Home Valuation Analyzer on Amazon.com. Simply search for residential real estate software to watch our 15-minute movie presentation and to subscribe to use our software. Second, there is a wealth of additional housing information on the Adkins Capital Management website, including our comprehensive home price index, interactive map of city housing analyses, newsfeed of pertinent housing information, housing methodology patent application, reverse mortgage loan analysis, movie catalog of quarterly residential housing market reviews, housing valuation methodology presentations, and tactical and strategic residential real estate hedge fund model portfolio. By visiting ACM, you can gain valuable insights into the housing market and make well-informed home purchase decisions. This is Troy Adkins saying thank you for taking the time to listen to this presentation.